Market bulls gained muscle last week as India Inc.'s Q4 results showed the resilience of the Indian economy. The sentiment got a leg up on Friday when a weaker than expected Q1 GDP data in the US cemented bets that the US Fed could soon bring its rate cycle to a halt. Overall, the BSE Sensex index surged 2.4% during the week, while the Nifty 50 rallied 2.5%. The broader markets too witnessed a similar rally with the mid-cap and small-cap indices advancing up to 2.6%. As we enter the holiday truncated week, the US Federal Reserve's interest rate action will be on investors' radar. While a 25 basis point rate hike is being seen as the likely outcome, Mark Matthews of Julius Baer believes that US Fed is coming to the end of the hiking cycle.
The futures market expects the Federal Reserve to raise rates by 25 basis points when it meets on the 3rd of May. Our forecast is for no more rate hikes because we think there's plenty of evidence that inflation is going to continue to come down. The U.S. economy is doing quite well, driven by consumption of services. But as we move into the second half of this year, the interest rate hikes that have already happened will start to bite, and the households will have depleted quite a bit of their savings. So we look for about a 50% chance of a recession in 2024. Much will depend on the Federal Reserve and if it wants to keep raising rates or not. The European Central Bank, on the other hand, is still going to raise rates by 75 basis points, in our opinion. Putting the two together, that should mean the dollar continues to come down. And that should also mean the dollar continues to come down versus Asian currencies like the rupee. The Reserve Bank of India, of course, recently went on hold, assessing the impact of its own rate hikes on the Indian economy. But beyond May, very few people do expect the Fed to continue raising rates, and that is the positive backdrop we see for currencies, especially the euro, but also the rupee.
According to Matthews, the US Fed will probably communicate about the end of the rate hike cycle without overtly promising so at the meeting. With the Reserve Bank of India already going for a pause, one last hike by the US Fed may not prompt it to follow suit. That said, the rest of the week will be guided by corporate earnings back home. Among the prominent ones, Ambuja Cements, Tata Steel, Adani Wilmar, Titan, Adani Enterprises, HDFC, Hero MotoCorp and Tata Power are slated to announce their Q4 numbers. Against this backdrop, what are the key levels that investors should track on the indices? According to technical charts, BSE Sensex may move in a range of 60,130 to 62,100, with support expected around 60,750 and resistance likely around 61,700. The Nifty 50, on the other hand, is likely to swing in the 17,700 to 18,350 range. The NSE benchmark could seek support around 17,850 and face resistance around 18,200. Markets are shut on Monday on account of Maharashtra Day.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.